Good morning, everyone. Good morning, every professional accountants and financial professionals, and our very important speakers today. Of course, we also thank you for all the attendance of today's online seminar. So let me quickly introduce myself and also our research center. So my name is Professor Albert Zhang, and I used to be an accounting professor in a Chinese University in Hong Kong. And then in a later time, I moved to York University in Canada. So several years ago, I decided to come back Hong Kong and join Hong Kong PolyU. And one of the reasons is because of the PolyU have a very unique and specialized research center. And the center, as you can see, is called Center for Economic Sustainability and Entrepreneur Finance. So it's a long name. So I was not the one who make this name, but we simply call it a CSAP Center. And so in terms of CSAP Center, this is a very first research center that is specifically related to the development of ESG or CSR knowledge in Hong Kong. And then given the importance of this knowledge nowadays to pretty much every single professional accountants and lawyers in Hong Kong. And we know that we need to dedicate, and Hong Kong also need to dedicate more effort to learn and also develop toward a better standard about the ESG. And so through this center, we are able to host seminars and couple times in a year. So every 2 or 3 months, we are going to host one. And today, this is the third one that we host since middle of this year. And next year, this will be the last one of this year. And next year, we are expecting to make another 5 in the 2022. And so through this center, we are able to better connect academic with the professional world and also the vice versa. And then we try to connect the professional world with the academic world as well, for the mutual knowledge and the experience sharing. And of course, we cannot make it happen without our very professional and distinguished guest speakers. And like today, we are very glad to have Dr. Xiang Yi, who graduated with his PhD degree in accounting from University of Queensland. And then so we are happy that he will be the first speaker to share with us about his observation toward the CSR in the marketing. So the role of CSR in the marketing. And then we are also happy to have Cindy from PwC. And in a later time, Cindy will introduce us about how she view the ESG development from the professional accountant's perspective. And finally, we will have a Jill from House William to share with us about her own observation through the lawyers, attorneys angle. And so today we will have a very good combination because we have a marketing, accounting, and law. And I used to tell my student that we cannot determine the starting time of our life, and neither we can have a full control for the ending time of our journey. But we can decide how we try to make our life more colorful. And I believe keep learning is one thing that can make us be more confident for who we are and for what we can do to color our life. And so again, I welcome every attendant of you. Let's have our today's excited moment begin to see their sharing. And I will pass the time to our speaker now. And thank you very much.
Well, good morning, everyone. My name is Xiang. It's my great pleasure and honor to be here to present a topic about the interplay between CSR and the consumers. In today's presentation, we will look at CSR from the consumer's perspective and from the company's perspective. We start with the consumers. So the first question is, do consumers care about corporate social responsibility? And if so, what do they care about and why? and how much they care, and where do they find such CSR information, and how they behave after knowing firms with bad CSR performance, using a recent study as an example. And the second question is to look at firms. Do firms care about consumers' interest by engaging in CSR? And what's the most effective way? What about CSR reports? And what about some recent evidences? So in today's presentation, I won't talk too much about academic terms. So what I'm trying to do is to try to let everyone know more about the academics, what have been done. And then the first question, let's begin with the first question. Do consumers care about CSR? Well, based on a survey of more than 28,000 consumers in about 23 countries in 2015, we have seen that consumers believe brands and companies have to be environmentally responsible. There are about 76% of consumers agree with this question, and 28% strongly agree with this opinion. So is 26% large enough? Let's compare to the second question. So whether the consumer feel guilty when he or she does something that is not environmentally friendly, there are only 63%. So if we look at these two questions, it basically says the consumers expect firms to do more in the environmentally social responsible activities than they do themselves. So most consumers think the companies should do more than the consumers themselves to engage in environmental responsibility activities. And then how consumers feel what is expected to be done by the firm. So what kind of things that consumers expect the companies to do? Well, you can see that based on a survey in 2021 about a survey of about 4,000 adults in the US, UK, China, and Brazil, you can see that most of them agree that companies should do something like reduce the carbon emission, have a standalone business practice in sustainability, take care of the planet and its people, raise awareness of important issues, and like climate changes and social justices, and put people and the planet before the profit. You can see that most of the consumers think the companies should do such kind of sustainability efforts. Then how consumers feel what has been done. So this is what has been done from the consumer's perspective, and see how companies engage in CSR. Well, you can see that only 63% of the consumers think the companies treat the employees well, have the policy of transparent, and use the products locally and locally sourced, and the brand is environmentally or eco-friendly. So you can see that there are much less has been done by the companies in terms of the CSR. So based on academic research, it says, well, quality and performance, low prices, quality consumer service are the top 3 reasons why consumers say they purchase from a brand. Others says they are likely to purchase from a brand that is committed to sustainability, represent a lifestyle they identify with, and represent ethical standards they agree with. And then you can see why consumers expect higher CSR engagement than what firms has been done. There are 3 reasons. First, some consumers think that companies engage in CSR is for the other-centered reason, like stakeholder-driven or values-driven attributions. So consumers expect that companies feel morally committed and see it as their responsibility to help. And the other consumers think that the firms engage in CSR for the self-centered reason, such as strategy-driven or egoistically driven attributions. So consumers expect that firms engage in CSR for strategic reasons, rather than voluntarily try to do CSR to be socially responsible. So people holding the self-centered reason think the companies engage in CSR to increase their profit. And there's also a win-win argument. Some consumers feel mixed motive to corporate engagement in CSR, view companies in a positive light when they create CSR-related efforts with a combination of the first two reasons. So there's a reason why there's a gap between the consumers' expectations of CSR and what they think has been done by the company. And the next question is why consumers care about CSR. Academic research shows that consumers tend to satisfy their personal values, such as prestige, status, self-esteem, and social acceptance from their consumption decisions. So that if consumers increase their personal values, such as prestige, status, self-esteem, social acceptance, they want to buy something that shows their personal values. So they demand the companies to do more in CSR. And when consumers consider a company to be ethical and socially responsible, they are also more likely to believe that such ethicality will reflect on the quality of its goods and service. So that's why consumers care about CSR from the academic research perspective. So now we know that consumers care about CSR. How much do they care about the CSR? Let's start with the purchase decision. So how CSR influence the consumer's purchase decision? There's a survey in 2014. The question is, how much effect would you say a company's reputation for social responsibility has on your own decisions about what to buy and whom to do business with? And based on the overall results, it says 70% US adults strongly agree that CSR affects their purchase decision. 34% says it sometimes affects their decision, and 25% said it affects their decisions once in a while. So basically, you can see that CSR can determine the consumer's purchase decision. So after we know that consumers are more likely to purchase products for firms with better sales performance, how much spending they are willing to pay. Now let's look at the consumer spendings. Well, it says 55% of consumers are willing to pay more for products from socially responsible companies. And in a more recent survey, you can see that this figure 55% increases to 66% in 2015. So we basically see an increasing amount of the consumers are willing to pay more for products from socially responsible companies. And what else? In addition to the purchase decisions and the purchase spendings, what else they are willing to pay? Or what else they care about CSR? Well, based on a survey in 2015, the most consumers says they will buy a product with social and or environmental benefits. And there's a new thing, 61% of the consumers think they are trying to do some donations to the companies with better CSR performance. And if the firms failed to provide better CSR performance, the consumers may boycott a company's products. And if the companies perform CSR well, the consumers may tell their friends, families about the company's corporate social responsibility effort. And some consumers may even volunteer in those companies. Well, from the academic research perspective, academic research shows that CSR only has a positive effect on consumers' purchase intentions when consumers are interested in CSR activities and support it. And there must be a good fit between the company's CSR activities and its business. And irresponsible corporate behavior has been found to have a great impact on consumers' purchasing intention than responsible behavior. The next question is, where do consumers find such CSR information? And based on a survey in 2018, consumers said they heard about companies' CSR from news media and word of mouth, social media. So we can see that most of consumers find corporate CSR information from the news media, social media, and the word of mouth from their friends or other customers. Those resources play a more important role than sustainability reports, advertisement, and corporate websites. So if firms try to advise their sales up information to the consumers, the best way is to use news media or social media and try to let consumers to use positive word of mouth to tell the others about company's CSR information. And why social media is important here for companies to communicate its CSR information to the consumers. There are a number of reasons, because social medias can uncover unfair treatment, give consumers power, encourage transparency, amplifies issues, and help employees share their experiences. There are a number of reasons why social media plays a more important role to help consumers to learn more about corporate CSR activities. And from the academic research perspective, consumers' awareness plays a major role in the effectiveness of the CSR activities. Various information resources such as media outlets, word of mouth, which talk about company CSR activities, are important of shaping a consumer's attitudes and beliefs towards that company. And companies are increasingly faced with calls for more detailed information on social and environmental impacts of their activities. So basically, in the last sentence, we find that consumers demand more information of the CSR that has been done by the companies. And now let's look at a recent academic research. It's about how consumers behave after knowing firms with bad CSR performance. So if there's a social media news about negative CSR events conducted by the company, what's the changes of consumers' spending before and after that negative events? So basically, we find that there's a huge decline in the consumer spending on the day and the next day after the disclosure of the negative CSR events. And if we classify the negative CSR events by different types of CSR, such as CSR that are related to the employee relation, community relations, environmental footprints, and corporate governance, we find that if the negative CSR events is about community relationships, the extent of the reduction in consumer spending is the largest one. So you can see that if the company has done something bad for the communities, the consumers will largely decrease their spendings the day and several days after the negative events. Now let's look at the second major research question. Do firms care about consumers by engaging in CSR? Then we look at CSR from the firm's perspective and see how firms deal with consumers using the CSR. Well, from the academic perspective, the answer is yes. Firms care about consumers by engaging in CSR. And the reason is that to have a successful brand and retain customers, business must create trust with their customers. And having a CSR strategy can help build a good reputation and earn trust and loyalties. And also, by engaging in CSR with consumers, companies can get direct feedback on what they have done and how to improve it. And word of mouth is still an effective form of advertising, and customers who have been part of social responsibility created by the company are able to tell other customers about the business. So it's a kind of advertisement. And what is the most effective way of the communication? Well, based on a survey in 2015, many consumers believe that if the CSR information is mentioned in the product or the packaged label, then consumers can learn more about the CSR performance easily. And the other way is media. And the second way is media, and the third way is advertisement. So basically, it is consistent with what we have heard earlier, which says social media is important for consumers to see the CSR. But for the companies to communicate CSR information, it may be better to tell what they have done in the products and then let consumers to know. And what's the most effective way of communication? So when consumers are unsatisfied with the CSR, so consumers may feel they are unsatisfied with CSR when the firm failed to respond quickly to the people's concern and complaints. And then consumers may be more happy if the firm communicates openly and transparent about how products are sourced and made. So basically it says, in order to more effective to communicate firms' CSR to the consumers, firms have to respond quickly to the people's concern and complaints about CSR, communicate openly and transparent about the CSR to the consumers. And what about CSR reports? So based on the fact that there's an increasing amount of CSR reports from 2011 to 2018, we have seen more and more CSR reports disclosed by the company. The CSR reports help to communicate the CSR performance to the consumers. Well, the consumers may feel that the companies may over-committed to their CSR activities. So maybe that companies and brands are showing off their commitment to the issues that go beyond their own bottom lines. So that means some consumers may think CSR report is kind of over advertisement. Companies and brands try too hard to make it look like they care about things besides their own bottom line. So basically, it says CSR report should truly reflect the CSR performance. If the CSR disclosure overstated their CSR performance, the consumers can realize that. And when it comes to social responsibility, consumers are looking for brands to show them, not just tell them what they are doing. And basically, navigating this expectation is not easy. Brands need to have a much deeper understanding of their consumers' values as they check their own social responsibility sources. They need to demonstrate real impact over time. So the consumers care more about the real impact of the CSR performance rather than what have been told by the CSR reports. And in a survey of more than 55,000 consumers across 15 largest markets in 2013, and there's an institution found that CSR suppliers commonly suffers from problems such as irrelevant CSR activities to consumers and other stakeholders and the profit of CSR activities. So the companies should care about the irrelevance of CSR activities and the fit between CSR activities to the core businesses. And in the end, let's look at a kind of recent academic research. So in the US, there's regulations about consumer complaints to protect the consumer's interest. There are two events. The first event is in 2011. This is when the company starts to receive consumer complaints. And the other event is 2013. In that year, the regulators start to disclose the consumer complaints to the public. So that means in 2011, the companies can receive consumer complaints about CSR. In 2013, those CSR-related consumer complaints are disclosed to the public. And then if we look at CSR performance, when the consumer complaints are available to the company do not increase CSR performance to a greater extent. But if we look at 2013, when the consumer complaints becomes a public information, so that the companies should care more about the reputation effect, the companies starts to increase the CSR performance to a much greater extent. So that means the companies, knowing that the impact of the consumer's interest has a great impact to the companies, to the reputations, the company starts to increase the CSR performance. And as a summary, after receiving consumer complaints, firms in the US tend to improve their CSR performance, reduce CSR concerns rather than increase CSR strengths, have a significant spillover effect on non-compliant firms domiciled in the same city and or the state as compliant firms, get less negative impact of consumer complaints on firm values after improving CSR, and get fewer future complaints after improving CSR. And so based on the study, we show that although consumer complaints against the financial institutions are not associated with firm CSR performance per se, firms increase their CSR performance following the public disclosure of consumer complaints by the US. Taken together, our findings suggest both consumers and regulators plays an important role in firms' CSR performance. So this is basically the presentation. And thank you for all your attention. And if you have any questions, you can ask. And thank you.
Thanks, Xiangyi, for your presentation. And we're a bit ahead of time. So right now we'll have the pleasure to have PwC's Cindy Ngan to share her presentation. Already Professor Chang already shared, but Cindy is the climate and sustainability leader for PwC. She'll share with us some of the broader developments in the market, and especially how that impacts financial institutions. So Cindy, over to you.
Thank you, Professor Lee, for inviting me to be part of this webinar. And I guess just now, Professor Isha just shared quite a bit from the consumer side of things, which basically cover part of my presentation, but it's actually a good start. So, so today, what I'm going to share a little bit of COP26, there's quite a lot of development in the international space. I'll share a little bit of that. And also what we're seeing in the sustainable debt market. Also why that happened in terms of the growth in the debt market. What's happening in the real economy side of things and the key role of the financial services sector. So let's dive into the first section. Okay. I'm assuming that quite a lot of you already know what ESG is about, so I'm not giving a ESG 101 for you. But there has been quite a lot of development in the last few months off the back of COP26. So I'm just summarizing at a high level in terms of what you might want to pay a little bit more attention to. And if you have time, you know, there's quite a lot of material out there that you can study a little bit. COP26 just wrapped up a couple of weeks ago. There are a few key messages there coming off that meeting. Sense of urgency. There is an expectation that if, you know, based on the current pledges by different sort of corporates and countries, by 2050, we are probably not going to meet our target. So there is a push for much accelerated change and movement around climate change. The positive side is that, you know, there are more countries signing up for net zero commitment and detailed plan to follow. There are also discussions and pledges around how to quit coal, also deforestation, slashing methane emissions, phasing out new gasoline-powered vehicles, and there's many more. Not all countries are signing up for some of these new pledges and promises. Obviously, there's quite a lot of challenge for some of the big emission countries like the US, India, and China to handle all of this and have concrete plan alongside with that. Because, you know, aside from obviously handling the climate side of things, it needs to balance out with economic development and also social impact as well. Imagine tomorrow we are not going to burn coal in China. That would be a huge, huge impact to a lot of people. So it has to be carefully handled. More work to be done and more detailed action needs to come out, but positive outcome coming out from COP26. Also off the back of COP26, International Sustainability Standard Board issue a climate-related disclosure prototype based on the foundation of TCFD. We are hoping that there will be more alignment in terms of international standards and frameworks, so there will be much more standardized reporting in the future, so allow comparability and also potentially in the future, assurance work around this type of reporting, because a lot of these reporting becomes more and more important to investors and shareholders nowadays. And I'll elaborate a little bit more later on when we talked about the why. Common ground taxonomy. There has been quite a lot of discussion around different countries having different sort of definition of what is green. The IPFS actually issued instruction report and also some tools around the climate common ground taxonomy for climate change mitigation. Essentially, it is a comparison between the EU taxonomy and also the China Green Catalogue. It points out areas of commonalities and differences. It doesn't mean to replace any of these, taxonomy, but we do see, some of the push and regulators, sort of aim to adopt this common ground taxonomy, particularly in the international space. Work is not completed yet. It took them a year and a half to start off with the basics. There will still be more to be done around specific sectors taxonomy. So that will be more to come, and we're glad to see this got released finally. TCFD, it also releases its 2021 status report in October. It also basically provides an update in terms of the adoption of TCFD, and we saw quite a lot of momentum around that. There's more and more corporates, adopting TCFD framework nowadays. And in that report, it also shows quite a bit of best practices and highlights some of the great disclosure that different corporates can leverage on as well. And it also issue a guidance on metrics and targets and transition plans to help corporates, to formulate their net zero plan go forward. So there's actually more to come. And I'll elaborate a little bit more in terms of, the Hong Kong regulatory side of things. Newer topics, probably not so much talked about at this stage because a lot is talking about the climate change, but Task Force on Nature-related Financial Disclosure releases this plan in June in terms of, what is coming up. There's more to come. Obviously in China, presidency also, put emphasis around that biodiversity. This is one of the topics that is starting to get momentum. So watch out for that. In terms of the broader ESG sort of landscape, what we are seeing is that there's significant increase in focus around this topic. No matter what Professor Yisha just mentioned about the consumers' wishes around that, investor are also paying a lot more attention around ESG topic. And real economy is picking up pace, and I'll show you some evidence of it. And aside from that, while there's quite a lot of discussions around the climate change aspect of things, the E side of things, there is more discussions around the social aspect and also governance, particularly in Asia-Pac's area, because there's quite a lot of developing countries. Social aspect is very important. Governance in Asia, there's quite a lot of family-owned business, and in terms of the maturity level, in terms of governance compared to the Western side of the world, there is still areas to continue to work on. Okay. Now, I just wanted to use one of the chart on the right-hand side, which is on here. This is, I extracted it from the Climate Bond Initiative. They released a report for Q3 2021. You can see that the sustainable debt market, the issuance volume basically doubled in the last 2 years. The 2021 column is just up to Q3, and you can see the momentum pick up very significantly. And I'll explain a little bit more the why. Now let's just talk about, how big this financing gap is, and this is where, the financial services sector is going to come in play. I'm referencing the International Energy Agency. It estimated that the annual investment globally has to go up to $5 trillion by 2030, and it has to stay at that level annually, at least until 2050, before we can reach the net zero goal. Huge. Now, for China, the biggest, obviously carbon dioxide emitter in the world, I'm referencing CICC's estimates. They were estimating that, China would need $21 trillion in terms of debt financing in the next 40 years in order to reach the carbon neutrality target. So there's huge need in terms of financing and investment. So I am extracting this from S&P Global, which they also reference the Climate Bond Initiative. This is the China green bond market. As you can see, for 2020 and 2021, as you can see here, also, oops, sorry. Okay. So as you can see, also the trend is very similar. It basically pick up a lot of the pace. Now, on the right-hand side, I think there is one very interesting sort of trend that I must highlight. As you can see in the 2021 column, which is only up to Q3, the proportion of green bond issuer, the non-financial corporate, increased significantly in 2021. Compared to in the past, it's probably government, financial institution doing that, but corporates are increasingly interested in issuing green bond to finance the transition. So which is a great sign. Movement is happening, but probably in the next 10 years, it's going to be growing exponentially in terms of the financing need. Now, why the growth in the sustainable debt market? So PwC surveyed about 300 investors globally. And what we found, including some of the very big and large, active asset managers, what we found is that a lot of the investors are prioritizing ESG goal as part of the investment selection process and monitoring process, and they're taking that as a priority. But at the same time, a lot of the respondents, they are not willing to give up the alpha. What that means is that they want both financial return and also impact as well. So aside from consumer who are demanding more green and sustainable products and services, right? The investor are demanding their investee companies to change and focus on ESG topic as well. Now, what do we see in terms of the international institutional investor space? We are seeing quite a lot more investor alliances and initiatives, and a lot of the large asset managers, they are actually exercising the proxy voting rights to influence, what the actions to be taken by corporates. So to some extent, the corporates, they have to change, because aside from the consumer demanding change, the investors are pushing for that sort of change as well. So summing it up, and I'll elaborate a little bit more in terms of regulatory change. there is quite a lot of significant focus on the ESG topic in climate change initiative. As you can see from COP26, you know, more governments and countries are signing up for taking actions. Also regulators, you know, they are setting up more frameworks and guidance around some of these aspects in terms of pushing for change. As I mentioned earlier, investors are obviously demanding for more focus around ESG topics. As a result, as you look at that, you know, a lot of push factor for driving a lot of the corporates that they have to change. Now, the other aspect also is, you probably heard about, you know, ESG score as well. There are many sort of ESG rating agency out there, Moody's, S&P, you know, MSCI and whatnot, right? They are evaluating corporates based on their ESG reporting, you know, CSR reporting to rate and rank them. However, you know, different sort of rating agency might have a different sort of methodology. They have, you know, different questions, and they might place different sort of weighting across this ESG element. And that's why, you know, we don't see a lot of the consistency in terms of the ESG scoring of different corporates. Some might rate really, really well under, you know, MSCI, you know, but they might rate quite poor, you know, under Moody's, right? So there's still a lot to work on around that space. But obviously, one of the challenges that, you know, because of the quality of the ESG reporting and also lack of, you know, common reporting and disclosure standard, it is very, very hard to compare and contrast different companies. So there is pressure from, you know, the rating agency, because a lot of the corporates are being rated now from that perspective. The other aspect also is that if certain corporate, their peers are moving along that journey, they might fall behind. So their competitors are moving fast. If they don't move, that would have, you know, quite a lot of, you know, potential ramification around that. Now, aside from that, employees as well, there are studies also mentioned that, you know, with very strong ESG focus, you know, sort of company, there is more employees willing or potential candidates want to join in and work in that company. So this is actually quite important as well. Suppliers. This is a little bit sort of related to the consumer sort of push and demand. For some of the big brands, because the consumer are demanding more green and sustainable products, what they need to do is to also push their suppliers along that journey. So increasingly, a lot of our clients in China, they're asking, hey, you know, can you come and actually help me do a certification, whether I can meet these ESG requirements that is set by my supplier, by my buyer, sorry. If they are not meeting that standard, they potentially will be losing business. So there's quite a lot of, you know, push factor for corporates to starting to change. Now, there are other reasons why, you know, obviously, you know, while there's push factors, there's also pull factors as well. Obviously, when we talk about climate risk, you know, physical risk and transition risk is very real. Obviously, you know, you understand there's the intensity and also frequency of a lot of the natural disasters is becoming increasingly more difficult to handle. And, you know, corporates need to evaluate whether, you know, they have potential significant physical risk that they need to manage. Otherwise, you know, there will be financial losses and damage that they need to suffer, and they potentially will suffer in the future. Transition risks, this is absolutely real. With all of the fast-paced change in terms of regulation and expectations from regulators and government, potentially tomorrow when things change, you won't be able to handle with, you know, all the other things that you need to handle. And that's the reason why corporates need to think about, you know, resilience and also sustainability with the lens of, you know, there's more regulations going to come. And if it's changes in at a very fast pace, potentially that would impact the sustainability of their own and viability of their own business model. And obviously, as the corporates, starting to handle and these changes, if they invest their dollar to rethink their business strategy, they might be able to rebalance in terms of the growth target, and they might also find innovation along the journey as well, and potentially offering newer type of products and services that will fit the future as well. The other aspect also is that it is actually a very, very hot topic now. Circular economy, supply value chain, these are some of the aspects that a lot of companies are investing in, not only for the ESG side of things, but also obviously with the recent sort of disruption in the supply chain, quite a lot of corporates, particularly in China as well, are relooking at their supply chain. And with using technology and revamping their supply chain, they potentially are able to unlock value along the way and also potentially increase productivity and save costs along the way as well that would contribute to the bottom line. So there's quite a lot of things that causes corporates to change nowadays. And when you are trying to make changes, you need money, right? And that comes to the importance of this ecosystem. Now, we just talked a little bit about the real economy side of things, why things are moving forward in response to all of the pressure and changes that's coming along. Off the back of government and public sectors, they are setting laws and regulations to push much faster paced change. We talk about investors, demanding, changes on corporate side of things, consumers, employees, and other stakeholders. And also regulators, I will elaborate a little bit more in terms of what's happening in Hong Kong in terms of the regulatory changes. And off the back of that, money, dollar is very important. And financial service sector is critical to this. It basically supports the redirection of capital flow, either in a debt form or equity form, into the kind of projects and assets and corporates that are moving towards the right kind of direction. So in the banking space, right, we are seeing quite a lot of demand, to support corporates to move up that green journey and sustainable sort of business model change. So you might have heard, green bond, sustainability linked loans and bonds. It is becoming a lot more popular now. I think when we spoke to quite a number of financial institutions in town, their challenge is, well, I am ready to finance a lot of these changes. However, it is quite hard for them to identify quality assets, green assets, or quality sort of projects for them to finance, because it is certainly not an easy task for the real economy sectors to formulate their own plan and be able to identify, projects for banks to finance, right? So there is that sort of challenge there. The money is there. A lot of the banks wanted to lend, but they need to make sure that they balance out, obviously the return and risk, and finding the right kind of assets that they can finance, right, or projects that they can finance. And the asset and wealth side of things, right, as I mentioned, investors are demanding more on the green product side of things. So as you probably heard, there is quite a lot of thematic funds out there, right? Green funds, sustainability funds, and whatnot. There is many, many more that's coming. Obviously, pension funds are looking into that as well. And I think recently there was more and more regulations coming through. MPFA, for example, was just recently, issue a circular that, they pushes the trustee to make sure that they incorporate climate risk, as part of the governance and oversight on the fund managers. So there's many more coming. Insurance, obviously, there is quite a lot of wealth products as well, right? How do they link up, a lot of these product offerings to their customers, around, the green side of things. And also on the liability side, obviously insurance, they have to think about climate change, how that would impact, their liability reserve, depending on, what type of, insurance they're giving out. How does that impact their underwriting policy? So, this is basically how we see the ecosystem, and financial services, sector is actually critical to this. Now, just in terms of the recent regulatory change, that has happened, Hong Kong Monetary Authority issued the proposed supervisory policy manual on climate risk management in July 2021. It is not enacted yet. We basically, PwC supported the banks provide, feedback to the Hong Kong MA, and we don't know when the final rule is going to come out, but the layout of the SPM, proposed SPM, is very much TCFD aligned, which focuses on, governance, strategy, risk management, and disclosure as well. And a lot of these elements are based on the recommendation, from TCFD. For fund managers, SFC issued its conclusion paper on management and disclosure of climate risk by fund manager in August 2021. And again, the layout is quite similar to the HMAs, and it's also based on the foundation of TCFD. And both of them basically ask the relevant financial institution that they need to incorporate climate risk into their thinking in the risk management sort of framework. And generally, disclosure would be required, fully aligned with TCFD by 2025. And MPFA also come out with circular for the trustee needing to have an assessment and plan in terms of how they are going to incorporate climate risk in their management of and oversight in terms of their oversight on fund managers as well. More to come on that. We do expect that regulations would come much faster in the next few years, and obviously financial services institution need to get ready for some of these changes. We also try to sum up a little bit in terms of what's happening in Hong Kong. We obviously mentioned quite a bit around the regulatory side of things, but it is not just about the push factor, right? The government themselves, obviously, the climate action plan was recently announced, in terms of, area of focus in the next, 20 years, 20, 30 years in terms of, the net zero strategy, focusing on, a number of areas that we would expect in terms of, electricity generation, energy saving and efficiency, green building, and green transportation and waste reduction. Hong Kong government also started the green bond program as well, and they just recently upped the ceiling by double, 200 billion, to support a lot of these transition. Now, also the Hong Kong government has launched the Green and Sustainable Finance Grant Scheme to support eligible bond issuers and loan borrowers to cover some of the expenses for bond issuances, and also some of the external review services that is needed. Now, Hong Kong government and it's also different sort of regulators in Hong Kong are also supporting innovation, doing quite a lot of research and investigation on some of the possible ways to continue to support the growth of the international sort of sustainable debt market, in Hong Kong. For example, BIS and Hong Kong MA just launch. That report was actually issued. Tokenization of green bond, how to use technology to make green bonds a lot more accessible to the retail markets as well, and how to use blockchain potentially to capture green data, as part of the bond issuance process, and minimizing a lot of the manual work along the way. Is a very interesting report. Do spend some time to look at it. There is also an auditing element that is embedded in there, too, as well. So please, if you have time, take a look at that report. More work to be done over there. The other aspect also is that Hong Kong EX also announced that they actually launched a study in terms of feasibility of developing Hong Kong as the carbon trading center as well. We expect probably it will be a similar sort of vein in terms of the Stock Connect, Bond Connect, and the Wealth Connect. How does that link into China, right? Because in Hong Kong, I think there is very, very few sort of company who would be able to probably generate carbon credit for trading purposes. So that's a very interesting topic that people are looking into right now. Capacity building. The cross-agency, steering committee, which is the alliances of all of the regulators in Hong Kong, aside from setting regulation, they are also supporting the industry to explore solutions in terms of how to address data gap issues and also capacity building from talent standpoint. So aside from obviously setting regulation, there's quite a lot of support that Hong Kong government is pushing out, and the regulators are very, very keen to support the industry to move forward on that agenda. Now, this is actually my last slide. I'm just highlighting some of the key challenges that we're seeing in the market and why we think accountants and auditors are very relevant to that. I sort of mentioned a little bit about the data already. I guess, the lack of consistent reporting and disclosure standards is a challenge. Without that, it is very hard for corporates to be able to consistently report on, their ESG performance. So it's being evaluated and being compared. And obviously, we as a profession should contribute into developing some of these framework and standards, so that, it can be rolled out as soon as possible in the next few years. ESG reporting, as part of the global investor survey that I mentioned earlier, quite a lot of investors, they question, today's ESG reporting, whether, relevance, as Professor Yishai mentioned as well, the relevance is very important. How reliable are the things that corporate is telling me? Is it timely? Is it complete? It is. What about comparability? I think there is a lot of things that we can look into from ESG reporting standpoint. And currently a lot of the ESG reporting, any sort of assurance type work is still voluntary. Increasingly, as more investors are focusing on ESG sort of reporting for decision making, we are expecting that potentially there will be requirement for some of these, sort of reporting to be reviewed or audited. And it might become an integrated part of the financial reporting in the future. So watch out for that. So I already mentioned a little bit about the evolving regulations and whatnot. It is actually very real, and we haven't seen that fast-paced change in terms of regulations so fast, right? We would have thought accounting standard would take years and years. For example, IFRS 17, it took, I don't know how long it takes, but now ISSB already issued a prototype already. So greenwashing, it is very real. It is a topic on its own. I I guess for us as, accountant and auditor, this is a space that we can certainly contribute into. But what I realize as, I continue to study more and more, we do need a lot of cross collaboration with, people who are experts in this environmental space. Engineers, some of the people who has been doing that and investing their time, in that space for years, combining with auditors and, accountants who had that sort of framework and skills to challenge some of these aspects. I think, this is definitely a cross-disciplinary area for us to collaborate with different people to solve this problem. I guess the last bit that I, obviously, for climate change, this is a very long tail sort of change. It can last for 20, 30 years. There is significant uncertainty along the way. And as I mentioned, while that's the case, don't ignore that. Don't think that, this is 30 years away, but change is imminent and potentially it will impact us tomorrow. So we have to get ready for that, and business need to get ready for that as well. I guess last but not least, I guess, for real economy side, this is to take the opportunity to transform and rethink a little bit about the strategy to be a lot more sustainable in the future. If they don't act now, potentially they are losing competitiveness and relevance in this space, and they will lose out eventually. So I guess while there are challenges, it is something to worthwhile to take a look at, and whether some of these changes are impacting the business model today. Okay, with that, I'm happy to take any questions or take questions towards the end.
No, thanks, Cindy, for the very well organized 30-minute masterclass in ESG. I would probably say covering various stakeholders, the impact on banks, insurance, asset managers, even the MPFA trustees. So I think what we're now getting in our panel for the next half an hour, I'll try to address some of the questions that were in the chat, but I may not catch all of them. Maybe at the very high level. So we all mentioned that COP26 is behind us, and well, I guess all eyes were looking at COP27 in Egypt later next year. I think maybe just stepping back, looking at COP26, in my view, there was some progress, but what is your view? Was it a success? Was it a failure? Can you reflect a little bit on what is going well? I know that Cindy, you already mentioned some of the agreements that we had, but let's start with some overall observations. Maybe Cindy and Dr. Zhang, any overall impressions?
Maybe if you don't mind, I'll go first. Let's see. Can you hear me?
Yes,
okay.
Loud and clear.
Yes. So maybe I'll start first. I wouldn't call it a failure. I think it's progress. I think we all wishes that there is a lot more tangible steps for a lot of the country, but what is great is that we see the momentum, we see the attention, and climate change is a very complex issue. It's not something that can be done overnight. For a lot of the developing country in particular, they are obviously struggling with recovery from the COVID pandemic. Adding to some of these changes, obviously they are really challenged. Social aspect of it, there's quite a lot of countries, they have to deal with the social aspect before they invest more on the climate side. So there is a call for the more wealthy country to support the developing country. I'm hoping that this is going to come. Now, I guess closer to home, obviously China, it is big top countries that has the most sort of carbon emissions and whatnot, and I wouldn't doubt that China would be able to make it. I was just meeting with one of the foreign bank CEO yesterday, not yesterday, on Friday, and he spent 3 months in China. He was amazed with the progress that China has made. And I think we need to be confident that, you know, more progress is going to be made. And we do need more study, research around some of these aspects of things. Investment in technology is absolutely key to this change. So I'm hoping that, you know, obviously financial services sector will be able to play a role to direct, you know, capital flow in the right space, so we can be a lot faster to meet the net zero goal.
Got it. No, thanks for sharing that. And I fully agree that we're making good progress. And Hong Kong probably has an important role to play as well for to help China meet its goals. And Dr. Zhang, any specific views from yourself reflecting on COP26?
Well, I'm very happy to talk about my thoughts about the CSR and regulatory requirement. In my presentation, I mentioned that the CSR can bring benefits to the customers and can also be beneficial to the firms to increase the sales. And that's the benefit of the CSR. And I also mentioned that CSR reports may not be that helpful to attract customers, because the customers may doubt that the credibility of the CSR reports and whether the CSR activity is fit with the company's main activities. And some consumers may doubt that the CSR may just be a tool, a strategic tool for the companies to get more profits. And then what about the cost of the CSR? As mentioned by Joe earlier, that there might be some litigation cost for the CSR preparations. Maybe I've seen that there are some cases when stakeholders sued the companies using the CSR related information such as CSR reports. And that might be a kind of concern for the companies to disclose more about their CSR activities. And the other cost has been just mentioned by the prior studies, that there is a kind of proprietary cost. And some companies may think if disclosing too much products information in their CSR reports, the competitors may find some useful information, and that increase the competition of the company. So that might be a kind of another concern for the companies to think about the ESG. And for the regulatory parts, I'm doing some research in the US, and there are some regulatory parts about the CSR that is related to the consumers. And the CFPB, a regulation in the US, required get some disclosure of the consumer complaints to the public. And then the companies may know more about the interest of the stakeholders, such as consumers, and then are more willing to improve their CSR performance. So basically, CSR is a kind of broad topic. The companies need to think of the benefits, such as increasing sales, attract customers, but also the companies will think about the cost, such as proprietary cost and litigation cost, in addition to the preparation of those CSR information. And that's my thoughts about the CSR.
Sure. No, thanks for sharing your thoughts.
Batman.
Dr. Zhang, I will probably come back to you later around the academic side from a talent perspective, talent development perspective, and research, and any specific master programs that we have for ESG. Cindy talked a lot around ESG reporting, the importance of the underlying data behind it. I think it was a week or two ago that IOSCO also published a guidance document around ESG rating and data providers. I know that there are many out there, the likes of MSCI, Sustainalytics, ISS, Moody's, VE. I mean, there are so many out there. And that's also a question from the audience here that, given that ESG ratings are different from debt ratings. Debt ratings, there's some correlation. There's maybe 1 or 2 notches difference, but there's a lot of divergence with ESG ratings. And what's your view on how to use the different rating agencies and how that can instill trust and confidence in ESG reports?
Maybe I go first.
Sure.
I guess fundamental to this, obviously when we try to analyze different sort of rating agency, their methodology, they're quite different. Some, like for example Bloomberg, they are just purely using public information. Yeah, but for some like MSCI, Sustainalytics, they might actually seek information directly from the company. So through questionnaires and whatnot, right? Providing them with additional information. And in terms of the questions that they have and what sort of indicator that they use, they can vary a lot, right? So I guess in order for investors to be able to leverage on some of this, information, we think that some sort of internationally accepted framework in terms of what are the indicators, weighting and whatnot, right? That need to come. And also the foundation to all of that is that we do need standardized, internationally accepted reporting and disclosure framework in order for the corporates to report consistently using the same sort of benchmark. Because otherwise, no matter how we're gonna set regulations and guidelines for a rating agency, if the fundamental data is not reported in a way that they can use, it's still no use, right? Garbage in, garbage out. So we think the most important thing is, one, fix the reporting and disclosure standard. And to some extent, we do believe that some of this critical set of information need to be sort of validated some sort, so it's reliable, it's comparable, reported on consistent basis. Then you can start to build framework around how you evaluate ESG scores across the board. What we are seeing now is that, for some of the institutional investors, we spoke to a number of, CIOs, right? What they do is that they don't just purely rely on the ESG score. They get the raw data, from these rating agency, and they have their own proprietary sets of, questions to evaluate how they perform. So it is sort of, unfortunately, a little bit messy plate right now. But with standardization reporting standard, that's probably step one. Then hopefully there will be more standardization in terms of what needs to be done, and disclosure on rating agency, how they evaluate and their methodology, how they use data and whatnot, right? Key assumptions that is driven, right? Disclosure is absolutely key.
No, thanks for sharing that. I fully agree with you, Cindy. I think some of the recommendations that came out of that IOSCO report, one definitely included, one part was around, yes, there's divergence in the outcome, but there should be more communication between the listed company issuer and the rating agency. At the same time, if we look at all the various rating agencies, looking at the various data sources that they're using, I think there are still some areas, geographies or product groups where there is probably, which should require a bit more attention. The other topic I want to talk about more around ESG reporting is, Cindy, at the start of your presentation, you mentioned that there's currently no requirement to audit or review ESG reports, but that may come. What is your view in terms of the roles of auditors or other professional services firm to instill that trust in what's written down in the ESG reports?
I think it might be a little bit self-serving here, but sure. I think, from the investor survey that PwC did, which is a global survey, it is very clear that, investors are not confident that current ESG reporting is reliable, complete, comparable, and whatnot, right? And this is where, auditors, and accountants will come in play. How do we provide assurance on some of the key metrics and, information that would be most relevant for investors and different sort of stakeholders to make decision off of, right? But I guess, there is still a little bit way to go, because, obviously there's quite a lot of qualitative aspect, in a lot of the ESG reports. Currently, for some of the more, larger organizations, they have been volunteering to get auditors to validate some of the information, mostly quantitative sort of aspect. For example, the scope 1, 2, scope 3 emissions sort of data. To provide that sort of assurance to the user of that report that, the number is sort of trustworthy, right? So I guess we do have a big role to play, but, off the back of it, we do need sort of standardized, frameworks, very much like accounting standard. If there's no benchmark, it is very hard for us to provide any assurance of. And same goes with, is this asset green or not green? Is it dark green or light green, right? Because of the differences in terms of taxonomy, it is very difficult, depending on which bar you're going to hold the organization to, it is subject to judgment. I guess, in the future, we do think that, a lot of this information would need to be, validated somehow. This is not because, auditors say it need to be. It's just regulators, investors and consumers, they're asking for some of this information to be validated.
Got it. No, thanks for sharing that. I mean, just on the back of that, I'm just thinking out loud. So sometimes I'm hearing about these second-party opinions that different professional services firm can provide. I don't think there's any, you don't need any certificate or license to provide it. Is there any rules or regulation? I mean, could I provide a second-party opinion, for example?
Well, currently there's quite a lot of different sort of, aside from the big accounting firm, there are non-accounting firms also providing this sort of assurance work. In Hong Kong, for example, HKQA and whatnot, right? Obviously the sort of regulations on them is very different from the big four accounting firm, because we do have auditing standards, independence requirements, quality control requirements and whatnot, right? I think going forward, depending on how that is going to pan out, we do think that that it's there's going to be more and more of that need for validation on green bond, whether the underlying investments are putting in the right place, whether the underlying investments is actually green or not. We do think that there will be tightening in terms of the practitioners practices as well. Aside from obviously the big four audit firms or accounting firms for on matter of fact. So eventually there got to be some the auditors, right, to make sure that their report is also reliable.
Got it. No, thanks for definitely a very important role to play for the professional service firm and subject matter experts out there. I think another question that I have, because if I look at the past year or so, we're seeing more besides regulators now being moving forward. We are seeing a lot of ESG activist stakeholders as well here, even here in Asia. I mean, maybe not so much at the E of things. I mean, for the E, we have seen probably globally, what was it, engine number 1 with ExxonMobil. In Japan, I think for me, was a watershed moment, was activist shareholders focusing more on governance with Toshiba. That was probably a pretty complex case with conflicts of interest, collusion of shareholders, etc. I mean, in Asia, are we seeing more potential for ESG activists to push companies to make a change? And any views from Cindy or Dr. Zhang? Cindy?
Thanks for the question. definitely, I think there is more and more. Hong Kong, I guess it's not just Hong Kong, right? It's international investor base, right? I was looking at, doing some research, right? HSBC had a pretty good commitment already in terms of what they're going to do with sustainable green financing. But, just right before the AGM, the investors and shareholders says, I want more concrete plan. And they have to go back to the drawing board in terms of what they need to do in terms of, when they're going to stop, financing coal. And this is a great story that, investors are really, really influencing some of the behavior and actions of corporates. Now, I think in the Asia standpoint, obviously the challenge is that, we do have a lot of, companies might be family owned. But I guess, for these, corporates, they also need to think about the viability of their business anyways. Even if it's not the investor pushing, right, they need to think about, their business model go forward for the reasons that we talked about. So I hope that answers the question.
No, it does. And it's also an interesting point that you mentioned around family businesses. I was speaking with a rating agency a couple of days ago. They did also mention that sometimes it's difficult, given that boards, yes, they may be female, but they may be the brother, the sister or the wife of a particular chairman. So I think those are maybe more Asia-specific issues. I agree that probably we'll see more ESG related shareholder activism. I think just lost my train of thought, but I think also with ESG shareholder activism, we're seeing now also employees being more empowered. They're more vocal what their company is doing. They want the CEO to have a stand, not just maybe in the past you could be more in the background. With COVID, I think their role accelerated. Investors are more vocal. And I think also a lot of the asset managers, their ETFs allow people to also vote. I think what I've seen in terms of statistics is that the number of ESG proposals that were voted, where people were approving proxies, well, I think more than doubles, well, 6 to 14%, I guess. I think it's definitely, you need to do something to keep your license to operate. Maybe a last question from me that I want to talk about is Dr. Zhang. I want to talk a little bit around the academic side of things, in terms of how do you see universities like ourselves focus on developing ESG talent? Can you share a bit around, Suzanne? Yeah, can you share a bit your view on, from a curriculum perspective, from a maybe even your own research perspective, how are we helping the industry or ecosystem to build talent and capability?
Well, thanks, Letman. Well, the role of the universities in promoting the ESG is very important. Well, like I answered in this chat in today's meeting, the universities can help to provide more CSR-related activities, such as field studies to different companies to see how they perform the CSR activities, to help the younger generations to know more about the CSR. And those younger generations are likely to be the consumers of the companies. And like I said in my presentation, consumers may push the companies to engage more in CSR. And the consumers may use such as the social media or news media to spread their views of the CSR towards the companies and damage the company's reputation if the company does not provide good CSR performance. And this can motivate companies to engage more in CSR and to get more positive feedback from the consumers. And that means if the consumers are more CSR oriented, then the companies are more engaged towards better CSR performance. And the universities may help to play a role here to try to educate people to become more interested in CSR. And to be more specific, the university may try to provide more courses, more activities that are related to the CSR. Maybe just talk about the specific CSR activities from different aspects from the stakeholders aspect, such as employees, customers, and even the environments, to see how they are related to the companies and what companies behave towards those activities. And that's kind of important here. And that's my understanding of the role of the universities. Thank you.
Thanks, Dr. Zhang. No, definitely. I think universities, including ourselves, we play a role, including the CSEF Center, through which we're doing this webinar now. Various research that we're working with different stakeholders in the industry, research reports, curriculum as well, maybe in the future ESG master programs, etc. And I think it's also important, I mean, specifically given that we talked a lot about financial services and ESG, talent that both understand financial services but have an understanding of ESG as well. I think that's important. Maybe last question. I see also Professor Zhang put in a note. Yep, that we are planning to launch an ESG specialized master program. I was not sure if I was allowed to say that, but yes, that's something that is coming from PolyU as well, an ESG specialized master program. So stay tuned to that. Maybe as a last thing, and Cindy, any concluding thoughts of on how to keep the momentum? What do you see in this year between now and COP27, besides companies and countries pledging more commitments? Anything what are you excited about, let's say?
Well, I'm excited that I'm part of this journey. I'm hoping that there will be more people joining this sort of initiative. You know, I think there is a lot of things that one brain is not enough. We need a lot of people and cross-disciplinary. It's not just the accountants, not just the auditors, right? You know, there's quite a lot of different kind of specialism pulling all together to make that change a possibility. So I'm just one of them, and I'm hoping that, you know, more people can join this sort of momentum to drive the change. And we do need a much accelerated sort of action plan in order to reach the net zero goal.
Great call for action for the ecosystem to work more together. I think to me it was very good. This seminar is very insightful. To me, it was really a short masterclass. This is probably one of the better ones that we had. Very insightful. We touched a lot of topics, and I think probably people are hungry for more. So I look forward to doing more of these panels in through here or other venues with yourself, Cindy, Dr. Zhang, and Jill. I mean, maybe a very last question, just because I'm seeing, are there any qualifications similar to CPA to do independent ESG assurance, just to top it off? Maybe Cindy, do you know?
I think there are different sort of qualifications to be sort of ESG specialism. But currently, I don't think that, because it is a very interesting space, because, you know, the assurance work is linking in our traditional sort of auditing and review standards, but this is just a separate subject matter that, you know, need to be worked on. There is that sort of different qualification certification for ESG specialist. That's why, you know, what I'm saying is you need to combine both right now. Right. Because a lot of the assurance work now is based off of, you know, traditional accounting sort of, you know, audit and review standard. It's just that the subject matter is different. So I think it's a little bit of the combination of the both. Got it. So there's a lot of work to do for both listed companies, professional service firms as well.
Thank you for your answer. I kind of believe now the concept ESG already spread from the capital market participant, especially like auditor, and then now go directly to the litigation field as well. But we do not know how it developed, but we will see. I think today we have a very insightful sharing from all the three distinguished and outstanding speakers. Representing our CSEF Center, this is I have to say this is a great talk shared by Dr. Xiang Yi, Cindy, and Jill. And especially today, we have a very good combination of marketing perspective, accounting perspective, and legal perspective. And so all three of you deliver the insightful and practical knowledge about ESG from this different angle. And then it's without a doubt that the concept ESG has become a very important topic nowadays. I think every one of us can observe that if you have a perpetual support to our seminar, the webinar, you will see the number of attendants actually increase from time to time. And we started this this seminar, I think, since a couple of years ago, right before the COVID. And we didn't have that many large number of attendants, but nowadays we have an even larger number. And academic wise, it's crazy. It's super crazy. During the last 2 or 3 weeks, I have seen like 5 or 6 conferences to be held in China only, and all about the ESG. It's super crazy. Even myself has been involved in 3 of them. And so we believe through this sharing that held by the center, all of us are able to learn from each other and keep our understanding toward ESG development up to date. And finally, representing the center, we would like to thank for all the great support from HKIRA and our moderator, Lemon, and also the 3 speakers. And by the way, for the speakers, we just created our CSAP souvenir representing so our appreciation to all the speakers. We will mail it to you guys. Okay, and finally, we hope to see all of you in the seminar in the coming year again, and wish everyone have a great week ahead of time. Okay, and thank you very much.
Thank you.
Thank you.
Thank you. Thank you.
Bye.
Have a good day.
Bye-bye.